What's up, traders? My name is Tone. The semis got absolutely hammered on Friday, finishing down 9.22%. It was one of those sessions where you couldn't look away from the chart. Let's break down what happened, where the key levels sit, and what I'll be watching heading into Monday. Friday was a session that changed the structure. The semiconductor space got hit with real conviction, and the levels coming out of that session are the most important levels on the chart heading into tomorrow. Zooming out to the daily, the markup that had been running from the prior swing lows broke on Friday, and it broke hard. The daily closed at 569.72, a full body close below multiple prior structural lows. Bearish break of structure confirmed. The distribution zone that sellers controlled sits between 623.91 and 642.77. That was the base where institutions were positioning before sellers took over completely. The prior session close at 627.53 now sits inside that distribution zone as resistance. Below current price, the demand zone where buyers launched the prior rally runs from 527.87 to 570.60. Price closed right at the top of that demand zone. That interaction is the most critical thing to watch at tomorrow's open. Dropping down to the hourly, not a single candle on Friday showed buyers with any real conviction. The semis sold from the opening bell and never looked back. The supply zone that capped this move sits overhead at 628.10 to 634.78. That was the final consolidation before the breakdown, and it is now the ceiling on any recovery attempt heading into tomorrow. Volume showed up on the selling side from the first hour and never let up. Any recovery attempt that reaches that overhead zone is selling pressure until buyers prove otherwise. The lean is firmly bearish, and the structure is backing it up. Buyers need to prove it above 593.09 for anything to change. That is the first structural level that puts them back in the conversation. Below 527.87, the demand zone breaks entirely, and significantly lower targets come into focus. The line in the sand is 607. A body close above that invalidates the breakdown thesis and requires a full reread. Until one of those levels gets decided, the chart has to show it, not predict it. Down to the 5-minute, and the trigger confirmed on Friday's close. The closing candle of the session was essentially all body, sellers in complete control from open to close, and volume showed institutions driving the final leg lower with real conviction, not stepping aside. All four criteria met simultaneously. The short is valid. Entry at 569.72. Stop at 575.67. The exact swing high of the trigger candle. No buffer. Target at 527.87. Above 593.09, the semis show signs of recovery and the short thesis weakens. Below 527.87, the demand zone breaks and sellers control the next leg lower. Between 569 and 593 is the battleground at tomorrow's open. Which side wins that range tells you everything about where this goes next. The plan is defined, the stop is exact, and the target is on the chart. Trust what the data proved on Friday and let price do the work tomorrow. The levels are set and tomorrow's open tells the story. If price gaps into the demand zone between 527.87 and 570.60 and produces a clean confirmation candle with buyers stepping in with real size, the long scenario activates. If price recovers toward 593.09 and stalls with a bearish candle and sellers showing up behind it, the short thesis strengthens further. Have the levels drawn before the bell rings tomorrow. If neither setup fires, observe. Price decides at the open. When sellers show up with that kind of conviction in a single session, they are not reacting to news. They are repositioning with purpose. If this breakdown gave you value, hit that like button and subscribe. It genuinely helps the channel grow and keeps this analysis coming every session. Stay disciplined, stay patient, and stay sharp.